As we enter Iran War 2.0, that's right, the second stage of the war in Iran, now that the MOU is pretty much a done deal, it's gone past an opening. Will the housing market survive? Of course it will survive, but how beat up will it become? We are now at the highest interest rates that we have seen since July 31st, 2025. That's right, almost an entire year. And we just had mortgage applications down this last month. That puts them lower than they were last year. And we had a very promising start to the housing market in 2026. But since the end of April, we have started to see just some cracking in the housing market. We know that foreclosures are up for both FHA and VA owners as they struggle with over 3 years in higher interest rates, and now they cannot sell their homes because their homes in some cases have gone down in value, or they haven't gained enough equity to offset the higher rates and the higher payments. So you're starting to see some homes sit a lot longer, especially condos in Oahu. And that's what we have to see. And here's the scary thing about this week. And there's not a lot of economic news. We're going to get into that in a second. But as I have always said, in the absence of economic news, chaos and a lot of hearsay and naysayers basically fill that void. And what we can expect in weeks when there aren't a lot of economic news, typically interest rates will go up. Now, I hope I am wrong, but what's going on in Iran right now, the lack of news, and quite frankly, based on what we saw last week where the various Fed presidents and governors were talking about the need to raise the Fed funds rate, man, as long as we have that going on this week, you're going to see interest rates continue to climb, maybe go past that 1-year high that we were at last year, the end of July. Now let's take a look at the specific news reports that are coming out this week that affect our economy and certainly will have an impact on the housing market. There's not much news, folks. Monday, China's making their rate decision. China's economy has been struggling of late. We will see whether or not they raise or lower their Fed fund equivalent rating. On Tuesday, we get the weekly ADP weekly preliminary estimate. And what are we expecting? Last week, we had 19.75 thousand jobs, new jobs created, probably going to be around there. Anything under 20,000 is actually good for interest rates. On Wednesday, we have a 20-year bond auction. On Thursday, we have the typical continuing and initial jobless claims reports coming out. And then Friday, we have a new home sales report. Folks, that is it as far as the news goes. Let's take a look at rates. VA rates, we are again 6.3%. That's the average across the country. We go back to what we're seeing with conventional. Conventional is between 6.6 and 6.8 or 6.83%. So again, elevated conventional rates. And anytime the conventional rates have been above 6.64, the housing market hits the brakes. We're almost there. 6.63 is the average 30-year fixed rate across the country. That's all I got for you this week. Stay positive, and just know, if you're a buyer, man, I tell you what, homes that are sitting on the market, you have an opportunity to get seller credits that will get that rate down lower, certainly way lower than what we're at right now. And with some of the incentives we have going on, maybe even a point lower than average. So some opportunity out there for buyers. Sellers, you got to be smart with your homes, how you're pricing them, and the incentives that you're giving. You guys have a great week. We'll talk to you later. Aloha.